Bitcoin ETFs ready for a new dawn? Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. I'm Forkast's editor-in-chief, Angie. A win for crypto with a ruling against the SEC. On Wednesday, a U.S. court sided with crypto asset manager Grayscale and ruled that the Securities and Exchange Commission was wrong to reject the firm's request to convert its Bitcoin trust into an exchange-traded fund, or ETF. Forkast's Danny Park takes a look at how this ruling may pave the way for other financial heavyweights to enter the space.
The District of Columbia Court of Appeals made a landmark decision on Tuesday to overturn the U.S. Securities and Exchange Commission's decision to block Grayscale's spot Bitcoin exchange-traded fund, or ETF, application. Now traders look towards a line of other Bitcoin ETF applications that were facing their initial deadline of the SEC decision in the first 3 days of September. That deadline, not unexpectedly, has now been pushed to mid-October. This includes the proposal from BlackRock, the world's largest wealth manager with over $9 trillion in assets under management. With Grayscale's landmark victory against the SEC, experts say the approval for other applications is unpreventable.
There's really no reason why the SEC would reject a Bitcoin ETF outright, and there's no reason why they would approve a futures-based Bitcoin ETF and then reject a spot Bitcoin ETF. It just makes no sense, and it's good to see, a judge side with the companies on this one.
Grayscale filed a lawsuit against the SEC in June 2022 after the federal agency rejected the company's proposal to convert its GBTC Bitcoin trust into an ETF. The Stanford-based digital asset manager reasoned that the SEC didn't provide clear explanations for the rejection, violating the Administrative Procedure Act. The company also stated that the SEC decision was inconsistent with its approvals of Bitcoin future ETFs. Speaking to Forkast in July, Grayscale's global head of ETFs, David Lavallee, expressed great confidence on their win against the SEC, calling their argument common sense. A slew of spot Bitcoin ETF applications from BlackRock, Fidelity, Invesco, and others were submitted in mid-2023 amidst an industry-wide crackdown by the SEC on crypto, mainly on the basis that it interprets most non-Bitcoin cryptocurrencies as investment contract securities. During a Senate hearing in July, SEC Chair Gary Gensler said that the Wild West of crypto is rife with non-compliance. The SEC's concern of crypto may have been well-reasoned, but for Calgary-based Accelerate CEO Julian Klamachko, the agency should note that Bitcoin ETFs provide value to investors.
We've had spot Bitcoin ETFs in Canada for over 2 years now, and they're functioning exactly as expected with effectively no issues. Yeah, in terms of performance, it's tracked Bitcoin as it should, and in terms of the value it provides to investors, it just reduces friction and cost in terms of accessing Bitcoin, which the Securities Commission, that's what they should be concerned about, because if you look at, there's a lot of frauds and scams happening in cryptocurrency, a lot of it offshore.
The news of Grayscale's win has already triggered a positive spurt of growth in crypto prices. Bitcoin grew 7% to nearly $28,000 on Wednesday from trading below $26,000 prior to the court ruling. Now the forthcoming approval of spot Bitcoin ETFs will factor in a more positive impact on crypto assets as increased liquidity and interest will enter the marketplace. Sean Stein-Smith of the Institute for Blockchain and Crypto Asset Research told Forkast, spot Bitcoin ETFs will open the proverbial door for more product approvals and launches, including those that are related to Bitcoin as well as other crypto assets. But will it have a long-lasting impact on markets?
This just further smooths the accessibility and the legitimacy of the asset class, I believe. And where it's heading, it'll likely take decades, but a default allocation in institutional portfolios, talking about pensions, endowments, foundations, and with that, even central banks as well. And with that, a price per Bitcoin that is significantly higher than where it is now.
Around half of the nation's financial advisors in the United States personally own Bitcoin, but only 12% are recommending Bitcoin to their clients. And the primary reason that advisors are not recommending Bitcoin is because there isn't an ETF. 77% of advisors say that when a Bitcoin ETF becomes available, they will recommend it to clients. Those advisors manage about $8 trillion in investor assets. If you place 1 or 2% of assets into Bitcoin, 1 or 2% of $8 trillion, we are talking hundreds of millions of dollars flowing into Bitcoin. And of course, the supply is fixed. Rising demand, limited supply, that can only translate to an increase in the price of Bitcoin.
Danny Park, Forkast.
Time for a quick break, but on the other side, we're going to get you details on how Asia's richest man is pivoting to blockchain and AI. Don't go anywhere.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
Thanks for staying with us. You're watching Forkast IQ. I'm your host, Angie Lau. Well, it is no secret that crypto is in the hot seat in India, but artificial intelligence and other emerging technologies aren't off the hook either. In a local media interview, India's Prime Minister Narendra Modi acknowledged that, quote, there's no point in ignoring emerging technologies, as he called for a global framework for regulation. He added that the focus should be on adoption, democratization, and a unified approach. Now, India is using its presidency of Group of 20, or G20, an intergovernmental forum comprising of 19 countries and the European Union, to push for comprehensive global crypto rules. The next G20 summit is scheduled to begin on September 9th in New Delhi. Meanwhile, blockchain technology has got the thumbs up from Asia's richest person. On Monday, Mukesh Ambani, chairman of Reliance Industries in India, the largest private sector corporation in India, said it's exploring blockchain technologies and central bank digital currency, or CBDCs. Now, he's going to do this via a newly launched venture called Jio Financial Services, or JFS. It's also partnered with the world's leading asset manager, BlackRock, to form Jio BlackRock, which is a 50-50 joint venture where both firms are targeting an initial investment of $150 million each. Now, local media reported that Ambani has long been showing interest in the blockchain space. In December 2021, he said blockchain is a technology he believes in and has the potential to redefine the financial industry. Ambani also made his AI ambitions clear as he announced a generative artificial intelligence ecosystem tailor-made for Indian consumers.
Looking ahead, Jio Platforms wants to lead the effort in developing India-specific artificial intelligence models and AI-powered solutions across domains, thereby delivering the benefit of artificial intelligence to Indian citizens, businesses, and government alike. India has the scale, India has the data, India has the talent. But we also need AI-ready digital infrastructure that can handle artificial intelligence immense computational demands. As this sector expands, we stand committed to create up to 2,000 megawatts of AI-ready computing capacity across both cloud and edge locations.
Moving on now to Hong Kong, the harbor city has added a new crypto player to its roster. On Wednesday, the Hong Kong branch of Switzerland-headquartered Seba Bank announced it has received an in-principle approval from the Securities and Futures Commission, or SFC, to provide virtual asset trading services in the jurisdiction. The SFC's approval, when fully granted, will allow Seba Hong Kong to offer regulated crypto services including over-the-counter derivatives, advice, and account management. In other news, is it the end of good times for Friend.Tech? The decentralized social media platform kicked off with a bang on August 11th on Coinbase's Base blockchain with hundreds of thousands of users, but things kind of seem to have taken a dramatic turn. As of August 31st, the platform had only 153 active buyers, quite a nosedive from almost 4,000 buyers about 10 days ago. Daily fees and revenues have also dropped over 90% from the recent peak. And some critics say the platform is dead because of greed and poor execution. Friend.Tech, which integrates tokenomics with social media, many big names had signed up to the platform, including crypto influencers and NBA players. So can the platform see a revival after the recent downfall? Well, let's find out from Ben Caselin, Chief Strategy Officer of MaskEx. And Ben, it's good to see you. Welcome to the show.
Wonderful to be here. Thank you so much.
All right, let's get straight to it. Nobody's making friends with Friend.Tech here. Critics say Friend.Tech is dead due to greed and poor execution, their words. But Ben, what's your take?
Friend.Tech as such, I don't have much of an opinion on it because it's just one project among many. But I think it's more important to look at social media at large. We can see that Elon Musk on Twitter is exploring different models with, let's say, ad revenue sharing and all types of kind of strategies to really reinvent social media. You know, there's been attempts at building social media apps on blockchain that are resistant to censorship. So Friend.Tech simply, fits into this kind of larger trend where entrepreneurs are looking for different revenue models. That's what I think. Now, whether Friend.Tech will succeed or not, I'm not sure. I'm not sure if it is so accessible to all, especially if there's like a fee required in order to enter a group, these types of things. I feel like it seems to be, the incentive there for users to participate is still very profit driven. That doesn't necessarily mean it's sustainable. So again, no comment on the future of Friend.Tech, but it's not unique in its attempt to innovate. And I'm sure it's not going to be the last attempt.
All right, let's also talk Bitcoin now. Got to talk about this. We saw trading volumes at a 4-year low. Ouch. What are you tracking right now from the macro perspective? Is it having any impact on prices right now?
Okay, so there's a few things. When we look at Bitcoin volumes, which are pretty much indicative of the whole market at large, when volumes die down, usually they precede a bigger move. For sure, we also know that Bitcoin, and as such, the larger crypto market, is very tied to macro factors. So surely we're all kind of anxiously, watching what the Fed will do. More important is actually the political developments in the US particularly. So I'm really more focused on the next 16 months, the election cycle. We can see that there's 4 presidents basically that are formulating that have formulated a position on Bitcoin specifically. I think that's pretty rare. These are the bigger things I think that we should be looking at. Developments around BRICS. I think these factors are more impactful for the kind of long-term prospect of the market.
Yeah, and how about this? The crypto community is celebrating news of Grayscale getting a green light from a federal court to launch the first Bitcoin exchange-traded fund in the U.S. So why is the U.S.'s top regulator, the SEC, wary of crypto in your view?
Let's say the powers that be wouldn't mind if BlackRock had a great influence over this market. Grayscale is in that sense a little bit of an outlier, just like Coinbase, just like Binance, just like all of these kind of new powers that came out of nowhere, you could say, from an SEC perspective. Yeah, perhaps perhaps that's a way to think about it. The way I look at the SEC's kind of moves is just trying to gain control over these markets and trying to put the players in place that are more aligned with its culture and strategic approach to finance. So for an ETF, generally, I'm quite optimistic in terms of approval. That doesn't necessarily mean that I'm optimistic in terms of its implications. There's a lot of benefits that you're just not getting from an ETF that actually is the core value proposition of Bitcoin.
And talking about the OG of crypto, Bitcoin, Robinhood transferred $3 billion worth of Bitcoin to a single wallet and is now the third largest holder of Bitcoin. That's kind of interesting there. We're hearing a lot of rumors around the transfers, but what are the concerns about holding such a large amount of Bitcoin in a single wallet?
From a security point of view, if you told me, oh, there's a wallet with $3 billion worth of Bitcoin, then my first response would be, oh, I hope that person or that group of people is protecting their keys well. That's my first thought. I mean, it's just a little bit of it's quite risky to put so much funds into a single wallet, but that's a very kind of, arbitrary statement. Let's say let's put it like this, like there is the idea that perhaps there is a holder with $3 billion worth of Bitcoin, and there is speculation about who it is. Yeah, this is not strange. Also during my time in Dubai, there are insanely large requests for Bitcoin purchases and sales on an over-the-counter basis.
Okay, and so what cryptocurrencies besides Bitcoin are you bullish on?
You will see consistently that Bitcoin holds that first rank, and as soon as you go to the second rank, you will see it switch around. You'll see like Litecoin, then you'll see XRP, and then you'll see Ethereum. And now we can see Ethereum really kind of holding that position. I think Solana, very active. You have to look at the developer communities. You have to look at the kind of, what directions are they going? And what I like about Solana is that they're also kind of going into the hardware space and Solana Mobile. And I think this is all, pretty interesting. Solana Pay, I think, recently integrated with some big financial firm, Shopify. I'm very cautious with altcoins because there is such a large amount of altcoins. If there's 100,000 tokens and I point to one, that's a pretty small chance that that's actually going to be the one that succeeds. However, just generally, over the past few years, I've been very positive about Solana.
Ben, as usual, super great to hang out with you, and thanks for joining us and sharing your insights.
Okay, wonderful to be here. I hope to speak again. Thank you.
Well, the SEC may have lost ground on ETFs, but it now has set its sights on NFTs. The SEC has fired the first salvo against non-fungible tokens. What it means for the industry. We're going to take a quick break and get you more on that and more on the other side.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, welcome back to Forkast IQ. Well, once upon a time, it was crypto exchanges and cryptocurrencies in the crosshairs, but now non-fungible tokens, or NFTs, find themselves on the firing line. The U.S. Securities and Exchange Commission, or SEC, has charged a Web3 media company called Impact Theory for selling unregistered securities. Impact Theory offered 3 tiers of NFTs, offering a different level of access, discounts, and perks across projects in their ecosystem. Each NFT used the ERC 1155 token standard, making them semi-fungible with non-unique art and numbering across the tiers. A $6.1 million fine has been levied against Impact Theory in disgorgement, prejudgment interest, and a civil penalty. Now, they're also required to burn all key NFTs in their possession and offer a refund to all primary sale buyers of their NFTs. The SEC said that Impact Theory planned to use the funds raised from their NFT sale to develop products, bring on more teams, and create more projects. While Impact Theory has settled, many are convinced that this is just the start of a much more calculated attack on NFTs by the US government. Well, let's bring in our very own data analyst, Yehudah Petscher, to break down all the other big moves in NFT markets this week. Still looking tough out there, Yehudah.
Hey, thanks so much. Yeah, if you look at the NFT market this week, you're faced with a fresh new 115-week low. That's in total NFT sales. You see a drop in over 1 million transactions compared to just the week before. And although you're seeing some floor prices creep back up in a select few collections, at the macro level, you're seeing what we've been seeing now for weeks and months. The value of NFTs is continuing to slide. Take a peek at the Forkast 500 NFT index, and that's exactly what you'll see reflected, the continued loss of the value of NFTs. But I'm here to tell you that nothing you're seeing truly is negative. It's not FUD. In fact, the market looks healthy. We're in a period of correction, and we are, in some metrics, in a period of growth. That 115-week low in sales, that brings us back to levels we saw in the NFT market in the May-June time of 2021. That was when we had just a fraction of the buyers and sellers that we have today. Back then, around 150,000 buyers and unique sellers compared to around 220,000 of each now. So to me, it's clear as day, we certainly have growth, at least comparing the market from back then to right now. Something that may have impacted the market last week in particular, well, it was the Bored Ape Yacht Club's 2-year anniversary party for their Mutant Apes. If you're not familiar, Mutant Apes are Yuga Labs' second-tier collection. They were given to Bored Ape Yacht Club holders for free. Both Friday and Saturday of last week, Mutant Ape holders partied in Miami, proving again that no matter what you think of NFTs or of the Yuga Labs collections directly, that community knows how to party. Beeple even showed up, and he's not a holder as far as we know. In fact, I think the only PFP Beeple owns is a CryptoPunk, but he was there. And ASAP Ferg put on an incredible performance for attendees. But here's the thing. While traders were away partying in Miami, the market took a nosedive, finishing both last Saturday and last Sunday below $10 million. That's a number we almost never see. In fact, you got to go back 2 years again, around June of 2021, to find sales that are similar. The moral of this story, Bored Ape Yacht Club and Mutant Ape holders, they can't leave. They need to stay at their computers and trade. Now, for the rest of this year, I'm watching to see if we hit more substantial lows. Ultimately, 5 million in sales a day seems very possible. I don't know if it's likely, but it's definitely possible. And really, I think the most significant stat or numbers to look at least for right now, is the monthly total for August, right around $400 million. In the modern NFT market, we've never seen sales this low. I consider the modern NFT market to be around, I'll say February of 2021 and beyond. We had $100 million in sales in January 2021, but we never came close to those numbers again, so I'm excluding that from the modern market figure, and I don't think that's a number we will ever touch. Consider $100 million in a sales gone. Could we get close to that? Maybe. Maybe we'll see 200 million, maybe 300 million in sales in a monthly period. That wouldn't shock me, although I think right around where we're at now, maybe a little lower, is probably our range. Dialing in just a bit deeper, it's Bored Ape Yacht Club, of course, at the top of CryptoSlam's rankings. Some of those sales were probably driven by the Mutant Ape party, just some excitement around the collection. People wanted to buy in maybe for the first time. And we're also seeing D-Market and Sorare and DraftKings. Those are the collections that I say are a taste of the future of NFTs. High volume, high supply collections. I don't see them leaving anytime soon. They're going to become staples of the NFT markets. Now, something that's worth your attention is the art movement in NFTs, which isn't always market impacting, but it's very, very important. An artist named Sam Spratt released a gorgeous digital painting called The Monument Game as an NFT, and it came as this interactive, immersive experience for around 250 players of the game. Collectors who bought one of Sam's player NFTs were invited to make an observation of the Monument Game NFT. Essentially, that is you narrating or adding your text, your story, directly onto the artwork and become a piece of the artwork itself. Well, that Monument Game 1-1 NFT sold for 420 ETH. It's around $700,000. And 3 players of the game are going to win one of Sam's Skull of Lucy NFTs, which is his community token. And by the way, right now, those currently sell for around 50 to 90 plus ETH on secondary markets. So they're very, very exclusive. It's quite a nice prize for those players who bought their player token at just over 3 ETH. Gotta say, there's really something special going on with art in the NFT space. There's also a new art platform called 01 that launched on the Avalanche blockchain. It's probably not the first art platform on Avalanche. It's the first that's been on my radar, though. Interesting mechanic here. Art is free. To collect, you just need to mint a piece of artwork yourself. It can be anything. I minted my signature. Once you create, you can collect 10 pieces. It's that simple. Word on the street is there's big-name artists minting here under anonymous accounts, making this really all about the art, and that's the spirit. Bitcoin also has a new marketplace on Gamma.io. It's called Prince. Tons of art, affordable prices, finally giving collectors on Bitcoin what they've been asking for. They ask for innovation or they ask for lots of art. Well, this is the art side, and this is very in line with what collectors love. Tons of art, very affordable prices. Definitely keep your eye on this platform. This is the time to just tighten your belt, hunker down, and get ready for the next bull run, however far off that is. Back to you.
Yehudah, thanks as always. Always great to be with you. All right, and hey, audience, it's always great to be with you too. It's a wrap for us on this week's show, and we really appreciate you for joining us, and thanks for tuning in. And of course, it's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. Please like and subscribe, or we will see you right here on this channel if you're watching us from the office, the trading floor, or your work from home space. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ, get intelligent in Web3.